Mr. Mike Selby, how are we, sir?
Very good, Mr. Matthew Gordon. It's
It's
been
busy out there. It's
almost a
kind of
month.
crazy.
Yeah.
It's been a while, but and a lot has happened. So, man, have I got questions for you? But first, we better start with nickel price and what's happening out there.
Yeah. So even though it's been 4 weeks, nickel has been trading back in its familiar 15,000 to 15,800 range during that whole time. Over the last week or so, it's trended down to the bottom end of that range. So we'll see what happens. Again, I don't see much of a breakout towards the bottom at this point. We're seeing right now, and there was a big nickel conference in Indonesia last week. It's become the nickel conference, and one of my guys was one of my people was attending the conference, and so the key theme of it was around ore supply. So as we talked to the last couple of shows, ore prices are trading at 2-year highs. We don't definitely see that in the nickel price, but you're seeing ore prices creep higher, and you've seen nickel pig iron and stainless prices and sulfate prices trade sideways. And so what you're seeing is a real supply squeeze in the middle there. So even Tsingshan announced that who basically like to squeeze everybody else out. Ore supply is tight, and profitability is getting hit for these Indonesian companies when Tsingshan even decides to turn down their supply at this point in time.
Well, we saw the headlines with regards to the Indonesian government stopping production at 4 projects. I mean,
Yeah.
what's the knock-on effect there? Is it major or not really?
No, that's the key. That it was interesting to see, and I think you'll see see more of this in terms of levers. That the Indonesian government has this RKAB license process, and so how many they give out determines how much supply could theoretically be mined. But what you're going to see is anytime they really want to even step supply back further, is you'll see them crack down environmentally. The sad thing is so many of these operations break all the rules. The good thing from a supply perspective is it gives the Indonesian an excuse to go into most of these operations and shut them down for not following the rules. So 4 smaller islands, sort of away from the main complex where there's some of the last higher grade deposits are located. The government pulled the licenses. So you guys, because there was a massive protest. This is part of basically supposed to be part of a marine park, and the same orange seawater stuff was happening. Again, doesn't need to be that way, but they can't seem to help themselves to mine it in a proper way that respects the environment. So they yanked 4 licenses. It's a couple percent of supply, but again, that's a couple percent of pretty high grade supply that's going into those factories. That's not happening right now.
Okay, so well, high grade, which is not happening right now, but also there's generally a sort of decline in grade as well. So in terms of it does need to be managed, and the Indonesian government, Philippines, and obviously China's very tightly involved with all of that. Do you think we'll sort of see any of that kind of those control mechanisms start to affect us in the West on a longer term basis if these are indeed the kind of OPEC of nickel?
For sure. You're going to see Indonesia squeeze it from the bottom, right? So, and that's already happening now with ore prices at these levels. That is going to squeeze supply into the market. So, I think you'll see prices go up. I think by end of summer, fall, you'll see prices pop up to the 16,500 range. And the other thing that's happening right now is again, with ore supply tightness, is we're already seeing lots of ore imports go from the Philippines into Indonesia. And what that means is normally you start to see stockpiles build back up again in China for the next Philippine rainy season. But that ore buildup hasn't happened because all that ore is going to Indonesia. And so, I think we're setting up for another squeeze later in the year. And again, I still think, we could see, stuff in the 18,500 to 20,000 ton range by year end as we get into the Philippine rainy season again in November, December.
Right, and the reason I ask that is because if I look at the kind of the interaction with, say, OPEC on the oil side, the US does try and influence strategy and influence pricing. That therefore, is the Indonesian government strong enough to kind of fend off any requests from China, from the US? Is it set up to dictate prices I'm saying over the kind of long term? Because if I look at recent example, you've had the US sort of trotting up or picking up the phone to China and going about these rare earths, let's do a deal. it's the geopolitics of all of this is starting to get a bit fruity.
No, for sure. So on the Indonesian side, that is that that between the Indonesian miners and the Chinese processors, that's a tug of war that's happening. But with the initial ore ban, with the implementation of a minimum price and this RKAB licensing system, that Indonesia seems to be enforcing, I would say they're winning in terms of it, and I think they will continue to win going further. And again, that's the shift in the market that people need to realize is happening. I think, in terms of the broader geopolitics, this past week, right, when, Trump beating his chest in terms of, all these tariffs and how everyone's going to come crawling on their hands and knees, to try and do a deal with the United States, the reality was because of rare earths, U.S. went crawling on their knees to China. They picked up the phone. They said, we need to talk. And, basically, struck a new deal just around rare earths and a couple of other items because they need the rare earths. I've said many, many, many times, on this show, critical minerals is not about electric vehicles. It's a national security issue. The U.S. government, European governments, all want to get China out of their supply chain for this very reason. This is the scenario that they were all freaked out about. And so I can assure you that, what's happened now in rare earths, is just going to reinforce governments doubling down in terms of trying to find ways to get domestic supply that's not controlled by China going forward.
It'll take time as well.
It will take time.
Yeah. With all metals. I think there's the constant cry from, all companies, precious metals as well. I think the gold guys are saying this is a strategic metal. This is a critical metal as well. But, on a more kind of, I guess, fundamental basis and utility basis, the critical metals of nickel, copper, lithium, etc. Those guys are struggling to, one, get financing, and two, get through regulatory kind of controls to actually get into production anytime soon. So it's a big wall that they're coming up against. Interesting times, and what that's going to do for metal prices. We can only imagine. Look, Mark, we're going to sort of rip through this quite quickly this week. We maybe should jump onto company news. I mean, Talon, they put out some more results.
Oh, again, kudos to the Talon team. That they put out a good drill hole, an amazing drill hole a few weeks ago, and they managed to top it. 35 meters in two sections, averaging almost 15% nickel, 15% copper. And almost an ounce of platinum, palladium, and gold attached to it. So there was about a 68 meter step out. So a decent step out. Again, they're going to have to see how big this zone gets. But it's exciting that that this system is capable of generating that type of upgrading. That is almost literally. I'm not sure which is probably pentlandite that's there, but that's almost basically pure pentlandite, pure chalcopyrite, with a little bit of PGMs sprinkled in there. So, definitely one to watch. And they just announced about a week ago, big fundraise off the back of that. So again, kudos to that team, and good to see some actual new meaningful discoveries out there. I mean, this is at their existing property, but this is a whole new structure at that property. So
yeah, okay. And actually, so let's talk about you. We'll talk about a couple of others in a second. Let's talk about you guys. You put out some new news. I think that before we kind of get into it's big, let's just talk about sort of the Ontario priority projects components here, because I think that was quite interesting to me. I didn't realize that was so well supported by the government.
Yeah, the priority projects list is a big deal. It's been a massive shift with the governments over the last elections, with Trump now in the White House. You've seen both the province and particularly the federal government. With Mark Carney, it's really about getting projects built. Enough talking. We need to see a whole range of projects get built across a range of industries. And so the federal and the provinces were working on the priority project list. Ontario put a list of three major initiatives, one of which was critical minerals, and we were one of a handful of projects on that priority project list. The big thing from an investor perspective is, in that same letter, they announced that they reinforced the fact that they're putting this new $500 million critical mineral processing fund together, and they topped up an Indigenous participation fund by another $1 billion. And remember, we already have one of the First Nations communities, TTN, as a shareholder now. So, the emphasis there is, these are the priorities. We're putting some more money on the table. It's not going to show up this week, but I'd be very disappointed if it hasn't started to flow by September. And again, with this emphasis on getting stuff done is great. And at the federal government, they've already announced a bunch of programs. They just need to get the money flowing faster. So we've talked about the funding packages that are there. I think you're going to see more money coming faster to a very special list of projects, and we're thrilled to be on that list.
Right, and obviously, I mean, part of that is obviously the your own system, the IPT carbonation, but it is a very appealing to them. In fact, there's something called, and you've announced it this week, the Net Carb Alliance. And what's that, and what's your involvement going to be?
Yeah, so again, very exciting announcement for us, and federal government, also open to doing oil and gas, but very focused on clean energy. And so, our IPT carbonation process allowed us to store about 1.5 million tons of carbon a year, which would make us one of Canada's largest carbon storage facilities. This Net Carb Alliance basically takes it up by 10x. They thermally treat the material. It creates more of the minerals that soak up carbon. And so in a place where you have natural gas pipelines, infrastructure, and these deposits, it creates the opportunity to look at a wide range of products that you could manufacture and use our tailings to take up that carbon atom that comes out of that methane, or, and again, a range of other products that get produced, where you have also have a little bit of excess heat involved in the process, or heat helps the process go forward, which is the case with a lot of processes. So, it again takes our whole carbon capture up a whole 10x to almost half a gigaton over the lifetime of the project. So very exciting.
Right. Okay. And talking of scale, you've also put out some numbers around Man West. Tell us what you've come up with.
Yeah, so Man West is one of what we call the three giants. So that's Reed, Man West, and Midlothian. We put Reed out earlier. Again, billion tons of resource, over 2 million tons of nickel, almost 1 million ounces of PGs, another 0.5 billion tons of potential that's there, which we're pretty confident being able to convert. Again, people ask, well, what does another billion tons, why does that matter? And the key thing here is, there's been very, very few discoveries outside of Indonesia. The world needs nickel from somewhere other than China, Indonesia. What we're unlocking, and a couple other companies are in the Timmins district, is really the only, new source of nickel sulfide deposits. And again, with this newfound government focus on helping unlock that, it creates this, opportunity that, really we're the only new district globally in terms of nickel supply. So Agnico Eagle provided the money to do the drilling a year ago, January. They wanted to see if we had a district, and we're delivering on that.
Okay. Well, look, and we're going to talk about the financing component. We're going to do a separate interview on companies specifically, because I think you and a few handfuls of companies have, I won't say cracked the code, but you've certainly come at the financing of these super large, $1 billion plus type capex projects in an interesting way, in a market which I think many describe as broken, and many are seeking alternative financing. You seem to have come up with some answers for that. So let's deal with that in the company interview, and just carrying on the some of the other company news at the moment. Obviously, Lifestone Metals have been on the show a few times. How are they getting on?
Yeah, so they provided an updated economic assessment. Very robust economics. Again, Kabanga has been initially discovered in the 80s, developed with Falconbridge and then Glencore in the 90s and 2000s. And so, a nice higher grade open pittable deposit. It's really the only high grade open pittable deposit of any scale that's around. So, good to see, that come through. They're going to start with a concentrator, which is good. They're still talking about a hydromet refinery, later in the project life. Again, that will always be the question mark. There's been some challenges with hydromet going forward, but, good to see some good numbers come out there. In terms of some other news, FPX Good to see them doing a deal with Jogmac, it's a Japanese company. They have a generation alliance to look at coming up with new projects. And, the central area of BC and Yukon is a place where you can find some other ultramafics. So good to see another one of their projects advancing along with their core project. And one that's been under the radar because it's a private company, but it's basically about 50 kilometers, 80 kilometers east of us in Timmins in the Kirkland Lake area, a company called Gold Candle Resources. They're taking an area where the Kerr-Addison mine went, which was one of the big Canadian gold camps. They're looking to do something similar with Detour and Malartic did in terms of mining a larger scale, lower grade deposit. And while they're drilling for that, they bumped into some nickel. And so they've ended up putting a nice little resource together with about 3 million tons at 1.6% nickel. That's, again, if they mined it as part of the gold, that scale would definitely support it or toll mill it somewhere. But, again, we don't see many discoveries and hopefully they'll bump into a little more nickel as they go there. So one to keep an eye on if it comes to market.
Okay, well, there's a little bit of company news. And then I think, maybe your thoughts on nickel market as a whole. Obviously, this year's been off the back of a couple of very quiet years. Would you say disappointing, or should we expect better things this year?
Oh, we should. I mean, I started the year, I said we're going to get to $20,000 a ton by year end. I still think we get there. I think we're at 16.5 range as the first step, and then by year end pop back up to the $18,000 to $20,000 a year range. This is really a transition. Again, these transitions sometimes don't happen quite as quickly as you like, but we are now entering Indonesia as OPEC phase, and nickel and stainless steel now as of last year is the biggest export for that country, and so the price of nickel and stainless steel matters to Indonesia. And so, you will see them nudge prices, higher than lower going forward. And those of us with projects that can generate cash at these kind of levels, are in great shape. So,
Mark, appreciate your time. We've got a dash. We'll see you soon and we'll get that company update. Okay.
Sounds great.